Hey everybody, it's Paul Brandt with your Monday market update. Be aware that rates are on the rise. Just today, it has gone up by about 42 basis points as we speak, which means a rate today with no points would cost, almost a half a point right now, just as a result of the couple of hours that we've been at work. It's totally volatile. And if you're out there looking at houses, you're representing buyers, you're a listing agent accepting offers, we just got to make sure that people are connecting with their loan officers, going over payments, their max pre-approvals. We don't like unexpected surprises, and I know you don't either. So in this video, we're going to talk about rates, what's going on with rates, and also just a little warning of what could happen in the short term here as we all patiently await that day that they've been saying it's going to come for about years now for rates to come down. So what do you say we go ahead and start? Let's bring up today's average interest rates here. You're going to see a 30-year conforming jumbo FHA. I want you to notice that if you take a look at my rates, I'm just saying they're all lower than the average rates here. Yeah, that's pretty good. All right. I just want to point that out, whatever. All right, so what's going on with rates? Why have they been going up over the last couple of weeks? Well, let's talk about today. Today we came in, U.S. retail sales retail sales rose in March for the second straight month. That puts a lot of upward pressure on inflation. Remember, the bond market, 30-year fixed rates, the kryptonite to your 30-year fixed rate is inflation. The more perceived or actual inflation is out there, the more increase in interest rate you're going to get. This report today really even shifted how the Feds feel about lowering short-term interest rates. Remember, if they're not going to lower short-term interest rates, they're feeling that inflation is not out of control or still there is a fear that it continue to rise. The bond market doesn't like that. As a result, you're starting to see 30-year fixed rates really react in a negative way to this. In fact, this report right here, wherever it's at, has taken the Fed, pretty much rate reduction in June off the table, but even in July, it's now below 50% that they're going to reduce the short-term interest rates. Check this out. On Friday, Federal Reserve Board President Susan Collins reiterated that she doesn't feel that the Fed needs to rush or make rash decisions in lowering interest rates. There's no urgency at all. In fact, she would be fine with one cut, maybe two, but she wouldn't put a lot of weight on any number. That right there tells the bond market that they're still concerned about inflation putting an upward pressure on interest rates. Then comes in CPI, which came in last week. CPI remains stubbornly high, driven by energy, shelter, and motor vehicle insurance of all things. And we're not seeing in core inflation getting closer to that 2% goal that the Feds have set out. Now, here's what's really interesting. So now we have rising interest rates, right? We have an upward pressure on interest rates. What's going on in the market? Well, this is the MBS Highways Housing Index, and it takes a look at nationally, but it also breaks down by territory. So let's just take a look at the West, the buying activity and the sales price in the West. Now, remember, a number above 50 shows that it's expanding. A number below 50 shows contraction, right? So it's smaller or bigger. So buyer activity in the West, April 2023 was 56. April 2024, 1 year later, is up 61%. But take a look at this price direction. April 2023 was at 47. April of 2024 is at 71. So now we have rising interest rates, rising housing prices, and it's just really uncomfortable. And by the way, wait till people come out with this dream for all money. So 20% more down, that's going to put more money out there. And all this stuff is going to add more buyers and ultimately cause prices to go up, even if rates stay the same or even increase just a little bit. So last week we talked about the cost of waiting may not be the most effective idea, and this is exactly our strategy to get a better house at a better cost, and this is the reason why. All right, you guys, let's talk about this week. Retail sales came in, knocked us down. Housing starts tomorrow. Wednesday's mortgage apps 20-year bond auction. Thursday, initial jobless claims, existing home sales. And remember, if we're not working together and you have questions, you want to put together a plan, you want to get pre-approved, scan this QR code. Let's do a hopes and dreams conversation. Would love to connect with you. Would love to help you. Would love to strategize in how to make your family survive this crazy, crazy market. All right, that's my update. Polo Brands, Clear to Close Brokers. I hope you have a great week. Take care.